Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is October the 9th, 2024, and I want to follow up on our past Chicago wheat futures analysis. And we'll start by looking at the weekly chart on TradingView. This is the next contract in front. And again, I find all these charts fascinating, and this is fascinating as well. You can see how back in May that sellers stepped in at the purple 200-week moving average, and it's, an interesting level there. And we saw a considerable sell-off down into August, upon which we got a rally, a fall rally, which is always interesting to me. The price now is trading it back above this green 50-week moving average, and the 50-week moving average is starting to flatten out and perhaps even start to advance. I think that's really interesting. And price today is trading at 602. Which, is above that round number of $6 and certainly above the anchored volume weighted average price for the year to date volume weighted average price. And that's represented by the light blue line here. That's currently sitting at 587. So we see this confluence of the year to date VWAP 50-week moving average and right around that $6 level. Lots of reasons why we think we could find support at that level. I'm going to draw a Fibonacci retracement here, and you can see where we got the high and the reversal is back at 617. Now, we had anticipated that in our Klarenbach grain report and prepared the readers for that. We also suggested a pullback could happen at that level. So let's just go to the daily chart and see exactly what's happening there. So again, we have the Fibonacci retracements on here. We can see how in 2 days it was unable to get above 617. In last week's analysis, we discussed a pullback down to that $5.92 to $6 level, and we got as low as $5.84. Again, look at this. The buyers stepped in at the purple 200-day moving average as anticipated. So that's interesting. The green 50-day moving average is below, and it's rising, I'd say, fairly steeply, and a nice rise there. Price is trading at 602, like I said. So what do we expect to happen here? Now, I could see some sideways consolidation here. I'll just get the brush going here, and maybe we see something like this, and we get back in before we make a move up to that 640 to 650 level. Now, yeah, I think we could see some sideways consolidation, allowing that 50-day moving average to catch up to the price and the 200-day moving average, and then, perhaps we build enough energy to get up to that 640, 650 level. Now, when I look at the daily chart, I don't see a whole lot of supply at this level. There's a little bit here, and it's going to be really tricky there's not a whole lot of supply, which I think will act as a resistance. Now, I think the resistance will be in the form of the Fibonacci retracement, but if that resistance doesn't hold, then I think we start moving up to that $7 level, which is interesting. But first, I need the price to get above 617 before I become bullish. So I'm going to be neutral to bearish until we break above 617. My name is Trent Klarenbach. It's overcast in Saskatoon. Life's good.